So the US markets have been largely at a crossroads for around 3 months now since establishing their respective swing highs. This is towards the beginning of very late February 2017, if not early March 2017. The US financial markets, they've been stuck range bound between resistance and support. This is otherwise known as what we call a channel consolidation. We've seen a couple of oscillations, really only one oscillation on the Dow Jones Industrial Average from resistance. Let me just color coordinate this for you. Just above 21,000, we saw the oscillation down to about 20,500, back up to resistance again. We more so came down most recently over the past 3 weeks into what we call no man's land. And then again, since forming what was potentially an island reversal, the market itself has come back up and retested resistance. This is going back really 1.5 weeks ago. Obviously, the Dow Jones Industrial Average has broken above its respective swing high. You can see my trigger sitting here very close to 21,232. But what is very nice in terms of constructive behavior, in terms of price action, is the simple fact that one, the NASDAQ has been leading these markets higher, and even into the close on Friday, we saw again the very strong finish to the shortened week's worth of trading. But in terms of the Dow Jones Industrial Average, we have held up and around resistance, and we have developed and also constructed what we call a bull flag continuation signal. It wasn't until Thursday where we started to push towards the extremes of what was the beginning of the breakout of this, in this particular instance, this 4-day consolidation type of resting pattern up and around resistance. This is where price action is clearly observing and noting that very clear resistance, which I've already pointed out to you at 21,123. But on Thursday and Friday, again, the Dow Jones pushing above it. It's to my surprise, sorry, not to my surprise, but it is of great opportunity at this particular point that there are a lot of individual trade setups aligned with the bullish breakout. The Dow Jones Industrial Average setting up that bull flag continuation, breaking out on Thursday and Friday, closing at historical highs. We are only a couple of points away from our 21,232 bullish breakout. You can see on my screen down below here the commodity channel index, very applicable to this type of chart setup. When we get into a sideways channel consolidation, when we have very well-defined resistance areas and also swing areas of support, once we start pushing above or below the respective resistance or support areas, in this particular instance above the resistance area, you want to confirm with the CCI that it is giving you a positive print above 100. What that is telling us definitively that the breakout in terms of price action and through the eyes of candlesticks is that this is going to be a legitimate breakout with a lot of trend continuation, promises moving forward. Now, as we enter into the month of June, and here we are, as at Saturday the 3rd of June, it looks as though historically we are going to break, the generally weak seasonality of this type of year. The summer of 2017 may turn out to be a very eventful and very prosperous, very profitable time for a lot of people, actively participating in the financial markets. Obviously, we are very biased to the upside at this particular time. If you have a look at the S&P 500 as well, pay attention to the CCI, also the ADX turning up. We have definitively now broken above the resistance area, which we've been failing to overcome since the beginning of March 2017. I think we've had more or less 5 touches on the S&P 500 up until the most recent, really 6 trading sessions or so, where once again we sort of flatlined only momentarily, a little bit different to that of the Dow Jones Industrial Average. This is what we call a stair-step continuation pattern. It is again a short-term resting pattern. It's a consolidating pattern within that of a bullish advance, and you can see on Thursday and Friday breaking definitively to the upside, even through to the close on Friday. You can see the S&P 500 on pretty decent volume as well, pushing back up and really pushing away from those rising exponential moving averages. In fact, the 10 is now separating very aggressively away from the rising 50. So if we do see any pullbacks and potential pullbacks, and when I talk about pullbacks, I'm talking about any material types of bearish moves. Really what we're sort of identifying at this particular point is that, look, it looks as though we have a legitimate breakout. There's nothing to be concerned about in terms of bearish warnings on the immediate sort of horizon. But if we can hold above these current levels, and again, that more or less goes back to the low which we printed on the Dow on Thursday, then again, the theme, the narrative, the story of this market is up, 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 up. You can see again, On the NASDAQ, since breaking out, and this is going back to 5,981, the NASDAQ has been leading the S&P and the Dow Jones Industrial Average high. You can see that since establishing this gap over here, this is what we identified at the time as either an island reversal gap or that of a measuring gap, which will hold as support depending, of course, on which gap it turned out to be. Where, as you can see, we continued to the upside, we pulled back, we held the gap, and since, of course, Wednesday's pullback, this is dating back to the 17th of May, you can see we had a bullish piercing pattern, and since then it has been the strongward upward advance. A secondary trigger here, 6,189. So for those of you in the class who've been trading the Qs, the diamonds, the SPYs, you are extremely profitable at this particular point. The good news is that when we go full circle, and again, when we start talking about intermarket analysis and sort of confirmational signals that we want to see in terms of Dow theory, they have almost definitively generated. If we get a definitive close above 21,232 on the Dow Jones Industrial Average, and we get a continuational push above that level, well, then we are going to see a trending market across the board, uniformity between the three widely followed US markets moving forward, which is going to be a very prosperous and profitable period for people who are actively managing positions in the US markets. Now, what that means is that generally during a trending market, volatility is somewhat suppressed, and it is the perfect opportunity. It is really the perfect and ideal environment for people and traders to be positioning themselves into bullish breakout trades. Now, what we've just done in the last 90 minutes is go through our top 12 individual trade lists, and the majority of those stocks have triggered, if not are on the precipice of triggering, which is very exciting. So I guess in this week's analysis video, really we have been at the crossroads on these markets where we have had a little bit of indecision. Again, that has been sort of formed between this very clearly defined area of resistance and, of course, the very clearly defined area of support. Again, support down the bottom, resistance at the top, and we are now piercing away from that top resistance area, which has been really holding price since the swing high peak dating back to March 2017. So a very exciting period right now. It is something for you to be alerted to, and again, it is at your disposal to take advantage of if you know what you are doing. So on that note, everybody, moving into the week upcoming of trading, it is a very important time for us in the world of financial markets, and where these financial markets are, they are printing more or less new all-time highs, a little bit different for that of the Russell and the transportational average at this point. But again, we've seen breadth pick up, which tells us a lot about the market advance and what appears to be at this particular point a legitimate sustainable breakout to the upside, which again is going to reward those who can position themselves into individual trades, even allocate capital into, I guess, just broad market exposure, whether or not you want to open up positions on the Qs, the diamonds, the SPYs. This is and should be a very profitable time for a lot of people around the world who are paying attention to this most recent breakout. Now, I haven't gone through all of the information, but there is enough at this particular point, again, to really clearly suggest that the good times are here, so to speak. It looks as though we are breaking out of this consolidation and we are moving into a trending market. And with that, we should all be very much grateful for and also excited about what lies on the horizon as we continue to push into the month of June, if not through to July and also August. It's very hard to sort of determine trend length or how long a trend breakout is going to last. All we can really do is work with the individual candlesticks, some of the moving averages that we work with, chart patterns, and also exponential moving averages as well. And until they change, we are going to hold a relatively constructive and bullish outlook across the board on the US financial markets. All right. I just wanted to say all the best to everyone around the world. This is James signing off on behalf of Pivot Point Trading. Please enjoy your weekend, and you should be very much excited about the week upcoming. All the best, everyone. Goodbye.